Right. Good evening to you all. Can you hear? Can you speak? Those who are in online, can you hear? Yes. Right. Can you see? Okay. Okay. Any comments? Okay. Can you hear? Okay. Can you see? Shall we start then? Okay. Once again, good evening to you all. So this is again, one of the standard we have discussed. We want to discuss. So this is again very important area that fair value. Those who are in online, you can hear, you can see, right? So this is basically auditing of fair values. So what do you mean by fair value and what's the application of fair value for accounting, right? Yes, any comments? Those are in online. So you discuss the contemporary issues in accounting subject. So then you are discussing lot of accounting standards. So you will find that the IFRSs and IASs, right? Basically the accounting standards prescribe you to apply the fair value for the account balances. Can you give some examples on that? Yes. So a lot of fair value measurements are there. So it is basically what? It is basically an estimation. Yes or no? Yes. What do you mean by fair value? Any idea? Basic idea? Yes? It's the market value. Yes. It's basically the market value. Now the opposite of fair value is what? Opposite of market value is what? Yes? Those who are in online? Cost. Which cost? That is historical cost. Not the basically the cost, that is historical cost. Right? The cost we have incurred in case of purchasing an asset or acquiring an asset. So simple example is for 10 years back you have purchased a land. So that is 1 million. Now what's the fair value of that asset? It is different from the historical cost. It is different from the value you have purchased that particular asset. Right? Then again, right, what is more relevant, what is more realistic for the decision making process, historical cost or fair value? Fair value. Right? Historical cost is the past, fair value is the present situation by considering the future aspects as well. Therefore, so almost all the accounting standards, right, recommend you to apply the fair values. Apply the fair values. Let's say for the assets, PPE, property, plant and equipment. So get the fair value, do the impairment test. Financial instruments, I think we have discussed in contemporary issues in accounting, that subject. So you want to go for the fair value, right? So everything helps you. Share based payment you did, investments, all are going with the fair value, right? So what does it mean? So you want to apply the fair value measurements and you want to get the fair value for your account balances, right? So then again, when it comes to the fair value, yes, all right. So it gives the more relevance for the financial informations, right? It is more realistic and relevant, especially relevant, right? So then fair value means, and fair value is an estimation. It's all about an estimation. Yes or no? Not all. Can you give the examples for that without having estimation for the fair value? Sorry? Share price. Share market price, okay. Okay. Share market price. So in that case, what do you mean by that? Yes. So you invest the shares in the market, right? So okay, that's all right. But most of the cases, there are a few examples that you will have the active market, and that can be taken. But most of the cases, the value cannot be traded in the market, or the asset or liability cannot the asset or liability is not traded in the market. Let's say property, plant and equipment, right? Only the very simple examples, or only the very few examples, so that shares invested in the CSC, then of course you can get the market price, all right. But for the others, except those few examples, so rest is non-tradable. There is no such active market for those assets and liabilities, right? So basically, our assets are not traded in the market, and again, if we trade that, then we can have a price. So then no more asset is there. So therefore, basically the fair value is all about estimation. So then again comes to the estimation. So estimation is based on what? Estimations are based on the assumptions, right? Based on the assumptions. Simple example is, if you are calculating that recoverable amount, or that value in use for your impairment test, right? So then you have to get the present value of future cash flows. What's all about, right? The future scenarios, it's all about the estimations, right? Likewise, so then again, okay, then with that assumptions, what does it mean? There is a room, there is an opportunity for what? To make the manipulations, intentionally or without intentions, right? Intentionally, if you are doing that, it comes as a fraud. If it is intention, there is no such intention, then it comes as accounting error. Wherever it is, so that will be a manipulation. Either it's an error or fraud, intentional or unintentional. It leads to the manipulation. So therefore, what I want to tell you is, with that IFRS introductions, we are going with the fair value measurements and the accounting estimations, right? Basically with the fair value measurements or fair values. So then the auditor is in trouble, right? Auditor is having more risk on making the true and fair view on those account balances, because these fair values are purely based on the assumptions, right? So we can't challenge on that. We can't get the evidences some cases. Therefore, what is expected in this standard is you should do the right collection of audit evidences. How do they? perform the what do you call that? How do they calculate the fair value? So what is the mechanism they have used to calculate the fair value? Right? Is it prescribed in the accounting standards? So then of course yes. So if it is the case, then if they have taken that market conditions and other scenarios into consideration, right? Finally, consider that the realisticness of the assumptions they have made, relevance on the assumptions they have made. That is very important, right? And again, right? So more important, another point is you want to disclose the relevant information on accounting estimates or the fair values. So make the disclosures. So what are the assumptions made? What are the criteria they have considered? Everything you can disclose in the financial statements. Then the reader can understand. So based on these assumptions, based on these facts, the management has prepared the financial statements. Therefore, make sure the proper disclosures are being made in the financial statements, right? So that is very much important from the auditor's point of view to make sure those aspects in the financial statements in case of accounting estimates and the fair value. Right? Any comments, any clarifications? Those who are online? So as a result of that, as I discussed with you, the auditor is having more challenge in case of auditing the accounting estimates and the fair values, right? So as I discussed, that you will find a lot of accounting estimates. Can you give some examples on accounting estimates? So in case of depreciation, you want to have effective lifetime. It is an what? It is an estimation. You want to make the provision for doubtful debts. What is that? Estimation. Right? You want to make a provision on warranties. What is that? Estimations. Right? Likewise, you may have a lot of estimations. Apart from that, again fair value you have to calculate and see. But again, it's also one form of estimation. So how do you get the fair value? That is discussed in the relevant standards. But again, that is of course basically on present value of future cash flows. Right? Most of the cases. So therefore, it's again an estimation. So as I discussed with you, financial instruments, you have to get the fair value. For that, you have to perform the impairment test. You have to do the revaluation. Then go with the fair value. So how do you get the fair value? So all are with the present value of future cash flows. Right? All are estimations. Now, as I discussed, what is the role of the auditor in those auditing on those accounting balances? Right? Again, I will repeat the same, very important. Right? So auditor has to make sure the relevance of those assumptions they have made, right? So relevance and the reliability and the relevance and the reliability on those assumptions made, or the appropriateness, whether it's realistic or not, and they have used the correct model, right? If the management has used the correct model, then again have they done the proper disclosures on their estimations or that fair value measurements. So make sure those aspects by the auditor by collecting the audit evidences on those areas, right? Sometimes you have to get the support of the expertise as well, right? So that is part of that management requirements, and again so management should be responsible on getting that, but again as the auditors, so you have to get the use of auditors experts, right? Whether you can decide that. So whether we want to have the auditor expertise on in these areas or not, right? So therefore you understand, so what's the application of fair value in our financial statements, and again what is the requirement from the auditor's point of view on fair value balances as well as accounting balances, right? So that's what I want to discuss in this standard. So the others are the, very simple. I mean, you can go through with that. So with that basic understanding, background information, we can look into this. Any comments? Yes? Right. So what is fair value? So this is the older definition as per the auditing standard as well. The amount for which an asset could be exchanged between knowledgeable willing parties in an arm's length transaction. We'll take both definitions on fair value. Right. So what's the idea here? The amount for which an asset could be exchanged between knowledgeable willing parties in an arm's length transaction. Knowledgeable willing parties. Knowledgeable means both parties are aware on the subject matter. Otherwise, one party can be cheated. So then the price will be not the correct price. Right? So that is the idea. Therefore, both parties should be knowledgeable and willing to do this transaction. Both parties are willing to do this. They are interested on, both parties are interested on this, making this transaction. In an arm's length transaction, in an arm's length, that's the idea. In an arm's length. What do you mean by in an arm's length? Right? This is the arm's length. So you do the transaction not closely by keeping the arm's length. It means, right? It's a business transaction. No, there is no related party transaction. It's only a business transaction. So it's not a transaction you are doing with the relative or any other related party. It should be like that. Otherwise, if you do the transaction with a related party, that will be a lower price. Or maybe higher price, not the market price. Right? So therefore, it should be an arm's length transaction. So this is the older definition. So we can move on to the next. So that tells you the new definition. So that is more comprehensive, but again with the same aspects are there. The price, that is more focused on the market price. Right? Now this is the definition we are using. The price that would be received to sell an asset or pay to transfer a liability. So earlier definition is not discussed about the liability. Now again this is discussed. The price that would be received to sell an asset or pay to transfer a liability in an orderly transaction between market participants at the measurement date. Take one by one. The price that would be received to sell an asset or pay to transfer a liability in an orderly transaction. So what do you mean by the orderly transaction? It's an arm's length transaction. It's an willing, so both parties are willing and knowledgeable. So all embedded with that word orderly transaction, right? Between market participants at the measurement date. Measurement date means what? The transaction date, right? So basically that is as per this definition, the fair value is what? The market price, right? That is happening, that is making the transaction in an orderly manner. right? Orderly manner means orderly transaction means knowledgeable with those two parties are knowledgeable, they are willing to do the transaction, and they have the arm's length relationship. Those are embedded with that, right? So this is more focused on liability aspects as well, the market price as well. Right, as we discussed, the estimation of fair value is particularly problematic for assets and liabilities that do not have active markets and that consequently require considerable level of professional judgment, right? So if you don't, as we discussed, if you don't find the active market on those assets and liabilities, then definitely we have to calculate, we have to estimate the fair value on those assets and liabilities or the account balances. So then when it comes to the estimation, we discuss a lot of challenges are there, a lot of assumptions are there, because estimations we have to make based on the assumptions. So then to what extent these assumptions are appropriate, effective, right? So it's a matter of professional judgment. So that cannot be, sometimes that cannot be challenged. So you can say I get the 10% because last year also we have the 10% increase. Therefore I get the 10% increase this time. This time we get the 12% increase. We are expecting some prospects. So we are thinking that industry is booming, that we will get 12%. Then that is the justification. Then from the auditor's point of view, so auditor cannot reject that. But again, really the case is different from that. Real case is different from that, maybe. That's why I told you it's very hard to challenge on that. It's very hard to reject. So that's why that the when it comes to the qualitative aspects, somebody can what do you call that argue on that, right? So make the justifications, but sometimes we can't finalize, we can't conclude, right? Right. As we discussed, this is the application of accounting estimates in our financial statements. Preparation of financial statements require use of estimates. Many measurements based on estimates are inherently imprecise. In the case of fair value measurements, particularly those that do not involve contractual cash flows, fair value estimates often involve uncertainty in both the amount and timing of future cash flows. Right? Very important. Two words. The uncertainty arises in both the amount and timing. What's the difference? We make the estimation that here we will get 1 million, second year 1.2 million, 1.3 million, right? Is the amount. But again, the years can be changed. I mean, years can be changed means the value can be changed over the period of time. That can be other way around. Or else, that is one scenario. Or else, right? So that is the difference in the timing. The amount can be changed. We don't get 1.1 million in the first year. We get only 500,000. Can it happen or not? There is a chance of happening that. Right? So therefore, we have the uncertainty in case of the amount as well as on the timing. We have that uncertainty on amount as well as timing. So when we get the money, which amount in simple terms? When and which amount? When and which? Because both are estimations. To conclude, to estimate the fair value, to calculate the fair value. There is no more evidences for the auditor to verify that, to vouch that. No invoices. Do you find invoices? Do you find any other source documents on these balances? No. You understand what I am telling? So these are the the applications of some few, not all. Fair value account in Sri Lanka. So share-based payments, I think you have discussed. Business combinations, I don't think you have discussed. But again, when it comes to goodwill and all that, so you have to go with the fair value. And again, impairment of assets, I think you have discussed, 36. So financial instruments, so you discuss. So you discuss financial instruments, right? So again, you go with the fair value. So these are the few examples, right, on application of account balances when we are preparing the financial statements. So then the auditor's point of view, so management will do the estimations by, compliance with the accounting standards. So then you have to make sure whether that management has prepared the financial statements as per the, in compliance with the accounting standards. But again, so to what extent the assumptions they have made to calculate these fair values are realistic and relevant. You have to check as the auditors. The measurement, now these are very important points. The measurement objective as fair value accounting estimates are expressed in terms of the value of current transactions of financial statement item based on conditions prevalent at the measurement date. So we will estimate the fair value based on the current situation, right? The need to incorporate judgments concerning significant assumptions that may be made by or others such as experts. So that's what I told you. If you want to get the expertise knowledge, support, get it. And do the correct fair value measurement. Right? Then you will find the availability of information and its reliability. So these are some of the challenges. The breadth of assets and liability to which fair value accounting may be or is required to be applied. To what extent we want to apply that. The choice, sophistication of acceptable valuation techniques and models. The need for appropriate disclosures in the financial statements about measurement, methods and uncertainty. We have to look into that. So as we discuss, you have a lot of challenges when it comes to the fair value accounting. Most of the numbers in financial statements are not facts but estimates. Auditing cannot bring certainty where judgments and subjectivity prevail. Right? Subjectivity is there. If it is estimation, yes, subjectivity is there. We cannot avoid because of the fair value measurements. While auditors cannot bring certainty to uncertainty, they may be able to figure out, but biases that may exist. True and fair is not hard and fast. You will have that challenge, right? So the simple idea is some cases you are not in a position to conclude that these estimations are true and fair. Sometimes that may be okay, that may be correct, but again those are based on the assumptions. We don't know assumptions are appropriate or not. So therefore it is very hard to reject. It is very hard to accept even. So as we discussed, if there is no market, fair value estimates differ from other accounting estimates because when market prices are not available, management must estimate fair value using an appropriate approach and assumptions that reflect those that individuals in the marketplace would make. Many assets do not trade actively, smoothly and frequently in arm's length market. So those are the things we have discussed. Right? So as a result of that, so we should have auditing standard on auditing on accounting estimates. So that's why you have SLUS 540, right? So as we discuss the auditing standard. So you will have, so we can discuss everything with this. You will find the financial statements. You have to prepare the financial statements in line with the Sri Lanka accounting standards. So that is basically IFRS and IAS. So in our case, LKSS and right SLASs. Right. So you will find the auditees. Then again, audit evidences you want to have, right, from the auditor's point of view. So to cover up the assertions. So when it comes to that, the fair value measurements, so you have to consider about the current economic conditions, going concern, identified supported assumptions, right? So again, you have from the other aspect, you have uncertainty in cash flow of timing, uncertain cash flows amount as we discussed. Then uncertainty about the future, then you have to make the judgment, right? So you have to go with the fair value measurement in line with the SLASs, select appropriate valuation method and comply with the financial reporting framework. This is basically the overall perspective on this. There are some accounting estimates that will give lower risk, right? Like that. So that depend on the business. You have the knowledge based on the knowledge, experience, and all that. So some accounting estimates involve relatively low estimation uncertainty and may give rise to lower risk of material misstatements. An accounting estimate that engage in business activities that are not complex. Accounting estimates that are frequently made and updated because they relate to routine transactions. Accounting estimates derived from data that is readily available. Fair value accounting estimates where the methods of measurement prescribed by the applicable financial reporting framework is simple and applied easily. So these are some of the examples, situations where accounting estimates other than fair value accounting estimates may be required. As we discussed, allowance for doubtful debts, inventory obsolescence, warranty obligations, depreciation method and asset useful lifetime, provisions against the carrying amount of investment where there is uncertainty regarding its recoverability, outcome of the long-term contracts, cost arising from litigation, settlement and judgments. So you will find some contingent liabilities and all that. So situations where basically fair value accounting estimates may be required. So as we discussed, financial instruments, share-based payments, right, property, plant and equipment held for disposal. So that is as per LKS 5. Non-current assets held for disposal, right. Certainty as assets of liabilities acquired in a business combination, including goodwill and intangible assets. Transactions involved in the exchange of assets or liabilities between independent parties without monetary consideration. You will find some of the examples. So you will have a lot. So as we discuss, so this is a part of financial reporting. So I think you have discussed these things in your financial instruments, right? I am not going to discuss those aspects, just to put into the PowerPoints just to recall, right? So this is about share-based payment, impairment. You discuss, right? So I am not going to discuss on those areas, but again you have discussed in contemporary issues in accounting subject those standards, right? Right. With that we are moving to the SLA is 540, that is on auditing accounting estimates including fair value accounting estimates and related disclosures. Right. So basically we discussed those areas. The objective is, as we discussed, obtain sufficient appropriate audit evidence about whether accounting estimates including fair value accounting estimates in the financial statements, whether recognized or disclosed, are reasonable, and related disclosures in the financial statements are adequate in the context of the applicable financial reporting framework. So basically what is the objective of this, as we already discussed, to make sure the company or the management has recognized the the correct fair values and disclose those fair values in the financial statements. So that is the basic objective. So what's the auditor's requirement on these accounting estimates? You have to assess the risk and related activities on the accounting estimates, then identify and assess the risk of material misstatements, response to the assessed risk, then perform further substantive procedures to respond to the significant risk, and evaluate in the reasonableness of the accounting estimates and determine the misstatements arise from those fair value balances or fair value estimates. And make sure correct disclosures have been made in the financial statements on accounting estimates. Right? Any management bias, so get the written representation and do the proper documentation. So as we discussed, the auditor shall obtain an understanding of the following requirements. So basically applicable financial reporting framework, how management identify those transactions, events and conditions, how management make the accounting estimates, and understanding of the data on which they are based, right? So this is a general understanding on accounting estimates made by the management. So already we discussed those areas. Then the methods including where applicable the model used in the making accounting estimates, then relevant controls, whether the management has used an expert, the assumptions underlying the accounting estimates, whether there has been or ought to have been a change from the prior period in the methods for making the accounting estimates, whether and if so, how management has assessed the effect of estimations uncertainty. So basically what do you want to take out of this is, so understand how management have been made the assumptions. So already we discussed, right? Then, so the auditor shall evaluate the degree of estimation uncertainty associated with the accounting estimates. So then auditor shall determine whether in the auditor's judgment any of those accounting estimates that have been identified as having high estimation uncertainty give rise to the significant risk, right? Whether the management has appropriately applied the requirements of applicable financial reporting framework, whether the methods making the accounting estimates are appropriate and have been applied consistently, and whether changes, if any, accounting estimates are in the methods. So you have to make sure those basic aspects. Already we discussed those things, right? Test the appropriateness of those accounting estimates. So test the operating effectiveness of the controls over how management made the accounting estimates. develop a point estimate or range to evaluate management point of estimations, understand management assumptions, narrow the range, right? How management has considered alternative assumptions, whether the significant assumptions used by management are reasonable. Already we discussed. Management is intent to carry out specific courses of action, its ability to do so, right? So these are the requirements. Finally, the management should make the proper disclosures, right? Recognition and measurement criteria. The auditor shall obtain sufficient appropriate audit evidence about whether the management decisions to recognize or to not recognize the accounting estimates in the financial statements. The selected measurement basis for the accounting estimates are in accordance with the requirement of the applicable financial reporting framework. The auditor shall evaluate based on the audit evidence whether the accounting estimates in the financial statements are either reasonable in the context of applicable financial reporting framework or misstated. So everything what we have discussed, right? So finally you should make sure the disclosures as per the financial reporting framework. So whether the management has done the proper disclosures in the financial statements in case of accounting estimates including fair value, right? Why the disclosures are important? So then the reader can understand, yes, so they have estimate this based on these facts. So then they can have the understanding, yes, whether these are applicable, appropriate, can we rely on this? So they can make the judgment by themselves. So this is what we discuss. Finally, you can get the written representation on that. And so on accounting estimates, so as a final audit evidence, right? So because all estimations are the responsibility of whom? It's the responsibility of the management. So as the auditors, what we are doing is we check the appropriateness of these assumptions, the reliability, relevance of these assumptions made in order to derive those accounting balances, right? So you get the written representations from the management, right? So this is all about that standard. Any comments? Are you okay? Any clarifications? So with that, I think I have discussed all the standards as per your course outline. This is the only standard we have missed. So I mean from my side. So and this is 10th session, 10th one. So just to tell you exact date. So if you can remember on your presentations. So you don't find any vacation leaves in this next couple of weeks, no, right? No holidays. 4th you have, no? So then that week is no lectures. So then the 14th week, when do you find the 14th week? Fourth of March. Okay, I will look into that office and inform the 14th week. Anyway, you have the assignment presentations, right? 14th week. I'll put a Dropbox with that information. So you can do the presentations on 14th week. Please prepared on that. So because I am not coming for the next few lectures, that Mr. Sanjay Bandar will be taking the next 3 lectures. So then after that I will be coming in the 14th week with the presentations to do, I mean no lectures on that day. So you want to do the lectures on that day, right, on your assignment work. So therefore I will put into the LMS, Dropbox and the other informations on that. Already guidelines are given for the assignment. So presentation Dropbox I will put into that. So then you can continue. You can do the presentations on 14th week. Right. Any comments? Any clarifications on this? So on the assignment or so the other areas? And 15th week I will keep for do the revision. So with few of the questions, past paper questions and all that. So I will do the revision on 15th week. So 14th week for the presentations and 15th week for the wrap up session. Right. So then next 3 sessions will be taken by Mr. Sanjay Bandar. That's the plan. So already I have discussed these plans with you just to recall. And any comments on this? So assignment or any clarifications, anything to discuss? Those who are in online? Only 2 are in online? Yes, 3, no? What is this? This is not my PowerPoint presentation. Yes? Right. So this is again, a specialty area in accounting and auditing. So again, very important area nowadays, and lot of people are talking, lot of people are involving. So very important area. So I just discussed few points on that. So in this level, postgraduate level, it is very important to know about these aspects while you are doing that audit and assurance subjects, right? So this is a huge area, but just to discuss few points, important points. So as a that foundation, so we'll have that session on this as well, right? So what is forensic accounting or forensic auditing? Have you heard about this? Forensic medicine? Have you heard about forensic medicine? Yes or no? Any idea? So what are we supposed to do here? Those who are online, any comments? Are you actually in online or just put in? Yes? Any comments? It's a, what is that? It's a proceeds about this. What is that? Can you elaborate on that? It's a procedures about the specific scope, A to Z. Yes, any more ideas? So we can discuss. Yes, what's your idea? No idea. You are working in the income tax, right? So you are doing that. You are in the which department? Right. So you are doing this. Huh? Yes. Yes, detecting frauds. Right. Okay. Detecting frauds. What else? Yes. Estimate the fraud. Detect and estimate the impact of the fraud. Okay. Investigating uh, financial crimes. Okay. Investigating financial crimes or else frauds. Yes. Yes. As you pointed, this is a the specialty area in accounting and auditing for what? To investigate whether the fraud has happened or not. Right? Not only that, investigate and tell that the management, so whether there is a fraud or not. First place. Right? If there is no fraud, so that's all right. If there is a fraud, then what happened? The forensic accountant should, right, do the evidences on fraud, which is supporting to the code of law. which is supporting to the attorney. Otherwise, somebody can say there is a fraud. Now that is the scenario, frauds and frauds and frauds. So no evidences gathered, right? The forensic accountant's role is to, forensic accountant or forensic auditor's role is to identify whether there is a fraud or not. Yes, if there is a fraud, so then provide the evidences, who has done this, what would be the impact. So then that can be proven in the court. So that is a requirement. So therefore, the forensic accountant's role is going beyond the that general auditor, so that auditor's role, because the forensic auditor should support the attorney at law, support the attorneys, support the the lawyers in the court by giving the evidences. Because if there are no evidences, then the court will not decide that this person has done the fraud, right? So nowadays, so we talk about the frauds, but no evidences provided. So then finally, so nothing will work out. So therefore, the auditor's role, forensic auditor's role is to find the frauds, and not only finding the frauds, then you have to support, you have to provide the relevant evidences. It's a must. It's the role of the forensic accountant. That is what is exactly happening in forensic accounting. Okay. Then we have discussed. So there is a separate standard on auditor's role on fraud, that is SLUS 240. What is the responsibility of the auditor in case of frauds? We discussed, right? So I am not going to discuss that aspect again. So already we discussed that. So now we'll discuss the forensic accountant's role in case of fraud. Now what happened is, the scenario is like this, no? So management is have a doubt, so there is a fraud. Otherwise they don't know exactly that person has done a fraud. Basically what happened is, the rumors are going on. So the stock says the red flags are there, symptoms. Stocks are going down, the business is getting down, collapsing. Losses are getting in the business. So then some symptoms are there in the first place. Otherwise you don't know, because the fraudsters are doing the fraud so very secret way. Nobody can find it. So only thing is, you will find some red flags, symptoms. So stocks are getting down, the differences are there, right? So some that unacceptable behaviors are with the employees, right? So likewise you will find different cases. So then what happened is, so management is having some doubts in their minds, so whether there is a fraud or not. So at that point, so they will ask for the forensic auditors, forensic accountants to come and check. So is there a fraud or not? If there is a fraud, then who is responsible, who has committed the fraud, right? So please give the information for us. That is the assignment. That is the engagement with the forensic accountant, right? So therefore, the forensic accountant's role is coming on ad hoc basis, when and where there is a doubt in the company or the business, right? If you believe that there are no frauds in your business, then there is no requirement of taking the forensic accountants to the business. But sometimes, most of the cases, there are frauds. You don't know, right? So the general survey has been done by the professional body on that, the fraud examiners, that is Association of Certified Fraud Examiners in USA. So any typical organization lose 5% from their revenue because of the frauds. From their revenue. Let's say your sales is or the total revenue is 10 million. Let's say simple example, 10 million. let's say 100 million, even a small, medium scale business are getting more than 100 million revenue, right? So 100 million revenue, then 5% is how much? 5 million. Yes, 5 million. You lose 5 million at least because of the fraud, right? So that is the impact, that is the gravity of fraud, 5 million. That is the financial loss only. There are a lot of other issues arising because of that fraud, right? Normally the fraudsters are the people who are more talented and committed, because ordinary person are not doing the frauds. Those who are having more knowledge, more expertise are doing the frauds. Huh? So that will lead to the white collar frauds as well. But so that blue collar frauds, so small scale frauds, I mean done by the low level employees, that is not that much significant. It's in so I mean very minimal amounts. Let's say they will take one piece of cloth, right? Take one small set of half sheets. Likewise, from the company point of view, it's the impact damage is somewhat lower. But when it comes to the white collar crimes, the financial frauds done by the educated people, so they are not going with the small amounts. They start with the huge amount. Then the damage is more high. Yes or no? Therefore, so both that frauds are unacceptable and both frauds are not I mean accepted. But again, so white collar frauds are very serious. That's what I want to tell you for the company point of view, because they have more power, they have more knowledge to hide as well. It is very difficult to detect, right? So therefore frauds are intentional and they will conceal it, they will hide it as much as possible. Then the forensic accountants or forensic auditor should be there to detect that. Even some cases forensic accountant is not smarter to detect that, right? So to that level, the fraudster is smarter, is more talented, he or she. You understand? So therefore, forensic accountants are one of the highest paid profession in the world. To that level, that is challenging, right? One of the highest paid profession in the world, forensic accountants. You understand, to what extent fraudsters are smarter. Not only Sri Lanka, all over the world, right? So I have uploaded a lot of things to your LMS. You can go through with that. You will find one question from the forensic accounting aspect as well in your exam, right? So I will discuss the paper structure and the way that the questions are raised. So in the final day, so but again the understanding last two papers. So how do we ask the questions and what is expected from you? So already I discussed with you. So that is based on the case studies. So therefore, so please work on this subject and get the maximum and earn more marks in the exam. So otherwise, don't put us to the trouble to pass you. It cannot be done. So therefore, please work on that and get your marks, earn your marks. So with the continuous assessments as well, and you don't find much issues, then you can do that your paper in a better way. Right. As per the forensic accountant literature and with the theories, so there you don't find much theories on forensic accounting, but there are some important aspects. The frauds are classified into three, right? So the categories like this. One is financial statement frauds. That is basically manipulation of financial statements. Okay, that is one aspect. The other aspect is what? Misappropriation of assets. What is that? Misuse of assets. Right? You take something from the warehouse and take into their home. What is that? Misappropriation of asset. You will use the vehicle, company vehicle, for your own purposes. If it is not, given, so you will use that for your own purposes. What is that? Misuse of assets. So the drivers are taking the fuel and sell it. Misuse of resources of the company, misuse of assets, right? So take the station from the office. Those are very minor and very minimal amounts, but it's coming as misuse of assets, right? So especially that the more frauds are happening in case of procurement, purchasing of items to the company. The thing is, you will be selected as the supplier once you do something, once you give something for that particular supplier committee or whatever the purchasing committee. That is very frequently happening irrespective of the company or the business. Right? Most of the cases, not only in private limited or not only in the companies, but also in the governments. So both aspects, those are happening. Right? That is again leads to the corruption. So therefore, frauds are classified into three. These are, we are talking about the occupational frauds, financial statement frauds. What is that? Next one, asset misappropriation. The other one is corruption, right? Right. Then another important aspect is, so why do the people commit the frauds? What are the reasons? Why? Can you give some examples? Why do the people commit the frauds? Do you think that frauds are very serious to the companies or businesses? Do they serious on the frauds? Do you believe that you will the frauds are happening in your organizations or not? First, you have to make sure that no, otherwise no use of talking about this as well. You have to believe that, because survey have been done, the 5% at least you lose because of the frauds. Any typical organization. When it comes to small and medium scale, that the percentage is getting higher and higher. Why? They have less controls. So if it is a large scale business, so then you have a lot of controls, lot of segregation of duties. So you have to comply with the corporate governance requirements when it comes to the PLC. So likewise, you will have a lot of controls when it comes to a big company or big business, large scale business, compared to the small entity. So in case of a small and medium scale entity, the frauds are getting more and more, right? Right. So then, please tell me. So why do the people commit frauds? What are the reasons? Economic, their financial level, financial situation, economic conditions. Huh? As a habit. What else? Those who are online, please tell me why do the people commit fraud? Why do people commit fraud? Yes? Any idea? right? Why do people commit fraud? No idea. So again, forensic literature is talking about three aspects. One is the opportunity. The opportunity is given to do the fraud. So if there is opportunity only, they will do the fraud. There are no controls in your business. But is they are to check the inventory in the business. Then, do you believe that employees are not doing any frauds? If there is no that security or CCTV camera or anything else for that your warehouse, so then what happen? People get something and go out. Yes or no? That will happen. Then the opportunity is given to do that. Then do the people commit the fraud. If there is no such opportunity, they don't do that because they know that they will get caught. Now few days back. So what is that teller machine? Money has been taken. That is I mean come in I don't know which category. So it's like robbery. So CCTV cameras and everything there, no? I mean safety requirements are there, no? So for one teller machine, ATM machine, they have broken the ATM machine and get the money, 57 lakhs, million, right? These are not occupational frauds. That is, burglary and other things. But if there is a chance, then what will happen? So a lot of security requirements are there, right? So likewise in a company, if you don't find the controls, then they will do the things what they want. So therefore, that's why the controls are very important. You should have the proper controls to reduce that, right? So therefore, the one reason is the opportunities are given. The other aspect is, right, pressure. Pressure. What do you mean by pressure? So simple example, you will be given the targets. So you want to sell 1,000 units for this particular month. What will happen? Otherwise you don't get the commission or the bonuses or whatever it is. Now what you supposed to do is you try to manipulate the records. If you can't do that, 1,000 units of sales, then you are manipulating that the records and show that you have sold the 1,000 units. The way that you are doing is maybe different, but there is a pressure to do so. Otherwise, you don't get the required whatever the bonuses or whatever the increments or whatever the promotions or whatever it is. So that is the problem with the budgets, targets. Then people do some manipulations to achieve that. Very frequently happening in businesses, right? So you will get the promotions based on the profit. You will get the bonuses based on the profit. Then what do you supposed to do? Right? You will do the manipulations of the financial statements and increase the profit to show a better picture, and you will enjoy. Right? Those things are happening. Right? Therefore, so another reason to happen the frauds are the pressure. Right? The other aspect is the rationalization or the justification. Once you do the fraud, once somebody is doing the fraud, they will rationalize. So I have done this because I have problems like this, financial difficulties and that a lot of issues, personal matters, and rationalize. Because of that I did justifications. Even another justification is my manager, my boss is, without doing anything, he will be getting this much of salary. I am the person who is doing everything, but I am getting very less. So therefore, I take something out of this. Rationalization, justification. that another person did the same fraud, same type of fraud, so therefore I did. So that person also working in the company, no issue for that particular person. So then I don't think that that is much serious, so I did. Another aspect. So rationalizations are coming in different formats, right? Rationalizations. So therefore, these are the three basic reasons to have to make the frauds as per the the forensic accounting theory. So that is the earlier discussion, but again, so after 1980s, so another point is coming in very important. Apart from these three, opportunity, rationalization, and the pressure, another one is coming in. That is the talent or the capabilities. Right? If you are capable, if that person is capable, then he or she can think more. So by thinking more and more, right, he will do something. Right? I mean, to get something out of that. So we have a lot of examples like that. So that there are people that they will what do you call that, using the IT knowledge, they will collect the money from the ATM or what do you call that, even teller machines, even they will develop the credit cards. So there are some lot of examples, right? They create the credit card, so they get the password, and they will get the money, they will do the shopping and all that. So by creating new credit cards or whatever the e-transactions, right? So what is that? Capabilities, right? They will use their knowledge, they will use their talents. As I told you, most of the frauds are being done by more talented people, more smart people, extraordinary people, right? So then only they may have the talent to do so. General people are not much interested on doing that, because they know that if I do this, I will be detected, because I am doing this in the normal conditions. So then easily traceable, easily detectable, right? So there should be a way of, so the fraudster is doing the fraud, so with the intention of what? Nobody can find this. I am the person only who is knowing about this. Any other body is not knowing to this. So with that, confidence only that fraudster is doing the fraud. But anyway, that whatever the fraud will be detected on one day, right? So that is sure. But the fraudster's mindset has been set. Which way? The way that nobody can be detected this, right? So that challenge can be taken only the smarter people, because they are doing some strategic work to hide it, or groundwork to hide it. So that can be done most of the cases only for the smarter people, more talented people. So that's why more capable people are doing more frauds. So it doesn't mean that all capable people are doing frauds, but most of the frauds are being done by some more capable people. Right? Right. With that, I will move on to the PowerPoint presentation on that. And one point I want to discuss. So direct cost on fraud is, yes, loss of whatever the or the amount taken by the whatever amount or the assets taken by that particular fraudster. But apart from that, there is a huge cost on fraud in addition to that, right? As we discussed, you will lose the most important employees in the organization, more committed employees in the organization. Your focus is different, getting different because of the frauds. If there are frauds in your business, what will happen? Your mindset is totally different from your core business. Yes or no? Because you are focusing on finding the fraudsters, not the core business activities, right? So therefore, a lot of huge cost inside the fraud. Right? This is very important information. You see, all over the world the frauds are happening. In case of Sri Lanka, so this is some informations in 2015. Now she is not more there. So as we discussed, the forensic is account in the special practice area of accounting that describes engagements that result from actual or anticipated disputes or litigation suitable for use in court of law. So very simply, right? So it's a the specialty area that talks about actual or anticipated disputes or litigation suitable for use in court of law. So that is what we discussed, right? Fraud we already discussed. I am not going to discuss. It's an intentional act. As we discussed, occupational frauds are three ways: asset misappropriation, financial statement frauds, and corruption. Right, so that this type of is characterized by intentional misstatements or omissions of amounts or disclosures in financial reporting to deceive financial statement users. Corruption, so again that leads to the bribery and conflict of interest. Right. Now, what do you mean by conflict of interest? You do the transaction with the relatives. It's a conflict of interest. You give some information, inside the information for your close friends or relatives or whoever it is. Conflict of interest. Right. It's coming with the corruption. Why people commit the frauds? Yes, as we discuss, opportunity, pressure, the rationalization. Right. So with the Diamond theory in 2004, that incorporate opportunity, pressure, rationalization plus capability. So how do you detect the frauds? I discussed. It's very challenging. Now there are rumors and everything is going on. So how do you detect? So what is the source to detect these frauds? So this is the base of the survey done by the ACFE. So you can detect the frauds by doing the audits, internal audits, external audits, any other IT controls or whatever it is. But so most of the frauds are detected with the information given by one person. Tips. Somebody should call and tell, or somebody should give whatever the information, hint to the management the frauds are happening. So please look into this. That is the tip given by the somebody else. So there is a person called whistleblower. What do you mean by whistleblower? I mean the whistleblowers are the people who are not interested of happening something unethical. So therefore they are informed to the management or responsible authorities. So this type of things are happening. Right? Those are called whistleblowers. In the world, so developed countries, we will have the whistleblowers act. to protect them. Now, what happened in our context? So, if somebody is given some information, that person is in trouble, no? So, that is not allowed, right? So, therefore, that type of format, that type of scenario environment should be required to combat the frauds, to reduce the frauds. We cannot eliminate 100%, but we can reduce. Right. So then the detection will be done through 40%, more than 42, yes, 42% from tips. Then again management reviews, 16% and more than that. So internal audits, so 14%. By accidents, basically 6%. Amount reconciliation 6%. Document examination 4%. External audits very less 3%. Because the auditors are not to detect the frauds. External audits. Internal audits is coming, 14%. Then again document examination, surveillance monitoring. So notified by law enforcements. So like tax enforcements and all that, right? Very less, 2%, 3% like that. This is the world scenario, right? Not in local context, world scenario. IT controls, so very less. So therefore, to understand, so one of the most important method of detecting the fraud is tip. So please tell me in do you have any this type of mechanism, tips or something like that? Yes. So what's the mechanism? Can you explain? So any telephone number or whatever it is there, or email or what's telephone number? Then who is the person getting that calls? I mean, who is answering for the call center? It's a general line that is going to the call center, general line, right? So it is not the good way. It should be going to the top level. Keep the confidential, and so okay. Sorry. 10%. Okay. Out of the tax payment. Is it happening? Really happening? Sorry? Sorry? True. Right. Yes? Okay. Yeah, that protection should be there, otherwise nobody is going to, give the tip. That protection should be there. So likewise for a companies, do you find that type of tip system? Right? So this is the world scenario, you have the Sarbanes-Oxley Act and all that, nothing to discuss much on that. Then just to tell you what is the auditor's role in this. So the difference between auditing and forensic accounting is totally different. So as we discussed, not totally, but there are differences. So I will take that point. right? Auditing is, recurring, usually happening. So non-recurring. So when and where that, auditors, forensic accountants are called, they will come and do that. So scope is, for auditors general. So as per the auditing standards, they will do the audit and form the opinion. But for the forensic accountant's role is very specific to that particular case. They will do that, the and make their comments. So these are the things happened, this is the impact, and these are the evidences, very specific, right? And the objective is opinion. So then this is a fixed blame, that is what? So that should be, not an opinion, that should be somewhat concrete, that conclusion. So there is a fraud or not. So then if it is a fraud, so what would be the impact and all that you should mention, right? So methodology is the audit techniques. Then again, fraud examination techniques are there. So you have to use the professional skepticism. Here you want to use the proof, evidences. You should prove that in case of forensic accountant. Otherwise, how do you say the fraud is there, right? So this is the difference between audit and forensic accounting. So this is a basic discussion on auditing and forensic accounting. So I have uploaded Excel file. Can you download and see? So there are, it will give, some symptoms on frauds. Please look into that. Do you find any frauds? I'll give 5 minutes. So please download that and see any frauds do you find in those files. So 1, 2, 3, 4. 4 practical examples are there. So please go through and tell me, do you find any frauds? Those who are online, please download this Excel file and see, do you find any frauds in these databases? right? So do you find any inconsistencies in that databases or data systems, right? Also in online. Now here you see what happened. You know, I mean, we have an inconsistency. ABC company, 123 W Main is the address. ABC company incorporation, 123 West Main. ABC Enterprise Incorporation, West Main Street. So this is a red flag. This is where you have to look into. You understand? So we can't find the fraud exactly. You know, this is the place. This is a point to do a further investigation, right? So likewise, you will find a lot of examples. You see this. What about this? We find here strategic business solutions. Here what is that? You know, spelling is different. Yeah, again different. So something wrong with that. So we don't know what is this, right? Let's look into this. These are some red flags. You understand? Here you see another scenario. You see here? Here you see again. Inconsistencies are there. Something to investigate. Same name with the different extractions or different tags. Yeah, number is different. Name is the same, right? You have to look into those areas. Again, this is real case. This is customer receipt information that is regarding return checks for the month of March. So this is a real case in a leasing company in Sri Lanka, right? So what happened here is, one of the sales executive in that leasing company, he got the money from the customers. So what he is doing is, once the customers are coming for leasing facilities in the first time, so what he is telling is for the customers. So let's say for 3-wheelers, motorbikes like that, especially for 3-wheelers. So what's the facility you are asking? 300,000. Let's say like that. Okay, you pay then. So what happened is, yes, the facility is asking is 300,000. So once you pay the interest and all that, you have to pay 450,000 at the end, right? Okay, don't pay 450. Now you pay me, so 350,000. So then I will give the facility. That person is creating the facility on behalf of those. I mean, that marketing guy is giving the facility on behalf of that particular customer. All the things are on behalf of the customer, right? So they will get the money from the, what do you call that, the customer, and that marketing guy or marketing person is paying the installment. He is paying, right? Likewise, he will be taking 10 or more customers for this scheme, and the marketing person is getting, the marketing executive is getting the money in advance from those customers, and that marketing person is paying the money to the, what do you call that, to the company, right? It goes for a few months, but what happened is at one time the checks were returned. So you see, what happened here. You see, for different customers, but in the same sequence of checks. So that means all checks are issued by same checkbook, but for 3 different customers. You understand? For 3 different customers. Same check numbers, I mean same check books numbers, same sequence is there. 220, 55, 56, 57. How does it happen? Because these checks are being issued by whom? That marketing person from his checkbook. Because already the money will be taken from the customer. Right? There is a fraud done by that marketing person. So this is the red flag, this is the point they have identified, the fraud. Right? So then they will continue their, the investigation and find that marketing person done the fraud. Right? These are few examples. So therefore, I mean, you will find lot of frauds. So this is a basic discussion on, fraud identification. Right? So I have uploaded a few of the, very important document to this, go through by yourself. So to get more understanding on this. because we don't have the time to discuss everything. But this is not, I mean, no, just to go through and see. So what is there? So lot of informations are there. This is for your information purpose, right? So a lot of informations are there. So even I discussed some informations. Please go through with that to have that knowledge on that. So if you are interested, uh, apart from that, I have uploaded another research document on fair value accounting. So you can go through with that even. So for your knowledge, fair value account and its usefulness to financial statement users, because we discussed in the previous standard SLS 540 the importance of fair value accounting and its application. So this is talking about that. So for your knowledge purpose, you can go through if the time permits. This is additional readings for your understanding. Right? This is what I want to discuss today. So if you have any comments, clarifications, you can ask. So again, I'm telling you that your assignments presentations will be on 14th week. So I will put the exact date by getting the schedule from the office. So I will put all that information to the LMS and the Dropbox. You can upload the your PowerPoint presentations, right? And you can do the presentations on 14th week, right? So most probably that we will complete all the discussion, I mean that all the presentations on 14th week, the 15th week for the final session or the wrap-up session, right, to discuss. So, all the areas what we have discussed and the, the paper structure and all that areas. And more importantly, please go through with your past papers and, be familiar with the questions and how to raise the answers and all that. So, if you have that, if the time permits, you can log into the accaglobal.com and you can download some past papers on audit and assurance, and even the answers are there. So that's the, code is F7, right? So then you can log into that and you can have that more comprehensive knowledge on questions and how to answer and all that to practice by yourself, right? So it's a very good source to develop your knowledge in this area. So at least if you don't have the time, please go through with the things what you have discussed, right? And go through with the past and develop your knowledge and the application of that the things what we have discussed. So to face the exam in a proper way, so please take your time. So you have enough time now. Otherwise, you will rush through the things in the final week. So it doesn't create more sense for you all. So therefore, please plan your work and start off doing your homework. So from these weeks onwards. Right. Thank you very much. If you have any queries, you can ask at any point of time. So we'll see you on next couple of weeks. So after next couple of weeks, so the other lecturer, Mr. Sanjay Bandar, will be taking next few lectures on audit report and other assurance engagements and some of the other areas. So as per the course outline, code of ethics, right? Those areas he will be discussing after that. So we'll meet on your presentations on 14th week. Okay. Thank you very much. We'll see you on 14th week. Any comments? Those who are in online? Okay.